Hello and welcome to another episode of the Bitcoin Standard podcast. Our guest today is Jack Mallers, CEO and founder of Strike app, one of the most exciting and interesting apps being built on the Lightning Network. He also has played a leading role in El Salvador's adoption of Bitcoin as its monetary standard. And also recently, he's helped Twitter integrate Lightning payments. And also, he's helped a whole bunch of athletes start getting paid in Bitcoin. And he's done other stuff as well, which we're going to be talking about. So I'm really excited about this. We've been trying to get Jack on for a while, and it's finally worked out. So, Jack, thank you for joining us and welcome.
Safe, that was a hell of an introduction. I really appreciate it. It's good to see you. And I know I've said it to your face, but I must say on record, Bitcoin, this community and Bitcoin Twitter really raised me. And you were a profound impact on my life and my upbringing from boy to man. And so always humbled by your presence and deeply appreciative of your work, man. I mean that sincerely. So thank you for having me.
Thank you, sir. Thank you. I'm very glad to hear that. It makes me feel like all that time is worth it on Twitter. It's paid off. Yeah, that's great. Okay, so I guess the first thing that I wanted to talk about is Strike app. I think it's really fascinating because so the focus of the Bitcoin standard is that Bitcoin is the hardest money ever invented, and so Bitcoin has the best salability across time. So it's the best way to send value across time because it loses over the long term. It's likely to lose value over time a lot less than other forms of money because there's very little inflation, and the inflation is controlled and predictable, and so therefore it holds its value quite well. But in my next book, the Fiat Standard, which is coming out in a couple of weeks, but you can actually still get it in digital copy from my website already. The focus instead is on salability across space, on the fact that you can just move Bitcoin across space and across national borders with very little loss of value. And most of the analysis in the book is focused on chain, but also there's a whole chapter on the Lightning Network. And I think Strike is a great example of what can be done with the Lightning Network. So I'm really looking forward to just hearing more about how it works, because the other kind of ulterior motive from this interview is that hopefully, if all goes well, maybe you'll finally move me up the Strike waiting list and get me an account on Strike so I can know what it's like and I can use it.
Yeah, no, definitely. We're working on the global launch, but no, that sounds fantastic. I'm excited to discuss. So wherever you want to start, I'm in. Let's do it.
Yes. So how does Strike work under the hood? So let's say one day, I achieve my dream and I climb up that waiting list and I can download the app and I do it. So I want to send money to somebody in Europe. So I'll say I'm in the US, I want to send money to somebody in Europe. How does it work?
Yeah, so that very practical example, we'll just walk through it in detail, and then we'll try and draw the abstract concept as a whole and why I feel it's very disruptive. But what Strike does as software is it tries to make Bitcoin as a monetary network usable and helpful. And so for the experience here in the United States, it's very simple. It's very akin to what a PayPal or Venmo or Square Cash App or a Chime would be able to offer a user, is that users very typically link some form of cash collateral that allows a financial institution to debit and credit to and from, right? And so you have your checking account linked or your Visa debit card linked, or even some forms in modern day, you have your Starbucks points linked to an application, and it allows you to perform some financial monetary function. And so for Strike, it's the same experience, is that you link a checking account, you link a debit card, and that is your cash collateral to send payments. And so if I wanted to send $100 to Europe, Strike is going to debit that $100 from my linked account, just like I would a traditional financial experience. Now, what is novel about this is Strike then, unbeknownst to the user and maybe not known to the user, is going to take that US dollars, it's going to automatically convert it to Bitcoin in such a way that it can be sent across borders and across an ocean can physically land in another jurisdiction in another country instantly and at no cost. And we're obviously making use of the Lightning Network there. And then as this bearer instrument arrives in a new jurisdiction, a new country, we're going to convert it back into the localized currency that is preferred of the recipient of this remitting payment. So in Europe, it would be euros, and then we're going to credit the euros back to the user. And so because we now have a physical bearer instrument that can travel borders globally, across borders, across oceans, instantly and for relatively free, and it carries the liquidity profile in every single currency. It also is an asset that has liquidity 24/7, 365. It doesn't take weekends off. Then you can get in and out of the local cash collateral system is maybe a better way to put it. It doesn't necessarily have to be banking system, it could be anything. And we're just debiting and crediting and providing liquidity to and from, and we're using this monetary network for the efficiencies it carries in expediting physical settlement anywhere in the world, if that makes any sense.
Yeah, so I think the tricky part here is what happens to the recipient? How do they cash it out in their local currency? So I can get the part where you debit somebody's account and then and then you convert that to Bitcoin and then you send it over with Lightning. That's amazing, and it's great that Lightning does that. It allows us to just move hard money across the world almost instantly. But then the recipient in Europe wants to buy their beer or their coffee, and they want to go to a place that doesn't take Bitcoin. So what do? How do they turn it into euros?
Yeah, for the consumer on both ends, both legs of the transaction, they're just dealing in fiat currency. And so the recipient in Europe actually is receiving euros in real time. So the Bitcoin is what allows us to escrow the physical value anywhere in the world at any given time. But then the recipient is actually just receiving euros that are instantly spendable. And so as a company, we're trying to optimize and provide the best experience we possibly can. And so in the United States, we're issuing a debit card that allows people to be interoperable with the Visa network, so to speak, as opposed to the Lightning network, right? And so I can go buy groceries, I can go to the pub. And so we'll launch a similar thing in Europe. But even at its base level functionality, you can take the euros that you were just credited and you can just withdraw them to your European bank account, right, over the SEPA network. And so this very violently shows the division that we have internally in our thesis around Bitcoin, the network, and Bitcoin, the asset. And we're just using the network in combination with the asset, but primarily the thesis of the company is around the network. But the consumer is actually just interfacing with fiat currency. And it actually, thinking about this as a remitting payment, what's actually happening is it's three legs of a payment, right? There's a BTC USD conversion where US dollars are purchasing Bitcoin in theory. Then there's a BTC payment where we're using the Lightning Network to escrow and achieve cash finality of a bearer instrument. And then there's a BTC EUR where we're selling Bitcoin for euros. And so in that way, there actually is in theory no USD to EUR rate that we're using. We're actually using the combination of BTC USD and BTC EUR to accomplish USD to EUR remitting payment. But the consumer actually just has euros like you would in a Revolut or a N26 account. And as a US consumer, it's just like Cash App or Venmo. You just under the hood, if you would think Revolut is SEPA plus the Revolut network, and Cash App or Venmo is ACH plus the PayPal or the Square monetary network, you'd think of Strike as ACH or SEPA plus the Bitcoin and the Lightning network, is that we don't operate on a proprietary closed network. We make use of this open global monetary settlement standard that is Bitcoin and Lightning.
Yeah, and this is kind of what's really amazing about it, why it sort of flipped over my assumptions. Because like if you read the Bitcoin standard, the way that I say it, the way that I try and explain how Bitcoin scales is that, well, we could just use all of the existing fiat payment rails. Visa already supports 150 currencies or something like that. They can add 100, they can make it 151. They can just add one extra currency and then make it that Bitcoin. And then, it's going to work in the same way that you use Visa, but instead of having a crappy inflationary fiat currency on the back end, you have
Mhm.
Bitcoin. But you flip it around, because what you're actually doing is that you're settling the, I mean, you're basically giving the fiat networks, the fiat payment networks, you're giving them much better mobility, much better salability across space. by utilizing the Bitcoin network, which is amazing. So it's not so much using Bitcoin the asset, in as much as it is using Bitcoin the network.
Yeah, I'm careful in my ability to just go on these like ranting tangents. So hold me accountable here. But it's actually really interesting how I arrived at the concept of strike in the first place, because I'm traditionally a so-called Bitcoin maximalist. And like I've hinted at and applauded Saif for his work, is I've spent my whole adulthood here, and really just my thesis around life is Bitcoin is like the best invention ever. And it was only until I was working on the Lightning Network. So first and foremost, Bitcoin on chain is a consensus protocol, and its deemed inefficiencies, according to the MSM, the mainstream media, are actually required for us to have a performant, sound money that can retain the monetary principles and properties that we deem valuable as human beings. And the time it takes for consensus and finality is required for us to fully audit the system to enforce a monetary policy and a monetary standard that we all subscribe to and believe in as hard money that has value and can be defined as scarce. And so then the Lightning Network was very interesting, because ultimately Bitcoin is software, it's programmable. And so what the Lightning Network achieved to do is solve from a very high level two problems. Is that the Lightning Network wanted to solve for the variable amount of time that's required to achieve finality in a Bitcoin payment, so that there's that, Roger Ver, like, the very early days of Bitcoin, is I cannot use Bitcoin in commerce because it's unclear when my transaction will be deemed final. And so Lightning Network wanted to solve that variable. And then the other was the variable cost to achieve finality, is that a Bitcoin payment could be close to free, or it could be $100. It's very dependent on the free market of fees. And if the Lightning Network wanted to solve those two, and then as I started to experience it, and I was building on top of it, and I was contributing to the community in the best way I could, what I ended up realizing is those two variables are what monetary networks that we're all accustomed to today optimize and solve for. Because if you think about it, when I'm going to check out at a Starbucks, the dollars in my pocket that are, represented and materialized as my Visa card don't magically hop out of the vault that I bank at Chase, that is 6 miles away, into the cash register at Starbucks. Visa has built a network that optimizes around the variable amount of time for finality for that merchant and the variable cost for finality for that merchant. And so I started to realize, like, hold on a second, that is absolutely amazing that this Lightning Network is actually becoming a better, more efficient version of monetary networks. And it's the same for Western Union. It's the same for Stripe with a P. And so that was my first realization. Another realization I had as I was working is we were tinkering with all these tools. They were early Lightning Network tools. They were more just like hobbyist, nerdy developer tooling. And I had to spend my Bitcoin to play with them and to tinker on the Lightning Network. And, as bullish as I am on Bitcoin, I didn't want to spend my Bitcoin, but I wanted to be interoperable with the network. I was able to achieve finality with a service like Fold or Bitrefill over this monetary network, but I didn't want to spend my Bitcoin. And I developed the thesis that those don't have to be intertwined. They could be mutually exclusive. Is that I could be interoperable with the network and make use of the fact that the Lightning Network is another version of Visa, without having to spend my Bitcoin. And actually, ownership of Bitcoin is just a decision that any individual can make at any given time. I was in Paris with a friend, and it was a very conversation where the friend said, I don't own Bitcoin. I wasn't as lucky as you were. I didn't get in early. It was like, it's not about luck. Your dollars can be Bitcoin at any second you want them to be. It is actually the most accessible and liquid asset in human history. You can buy a penny worth of the thing, and it's so accessible. It's open 24/7. You can do it from your mobile device. So a dollar is as good as Satoshis, and Satoshis are as good as dollars at any point, and all programmable. And actually, that decision is up to the individual holder of how they want to store value and whatnot. But the way that we achieve finality, and the cost of which and the time at which it takes us to achieve it, that is a totally separate problem set that we've seen industries built on top of over the last few hundred years. And so I divided them and was like, can I build the experience that Visa has built for Starbucks on top of Lightning? Because in theory, it's much better for a plethora of reasons. And it was these type of realizations that I was making in real time, where I conceptually developed a division between the two. to where I don't we don't have to have hypercoinization for the Lightning Network's value to be realized. The Lightning Network actually is the best performing monetary network of all time for reasons I'm sure we'll get into. But then it became, can I develop an experience that makes it usable and accessible to where in which a remitting payment with your checking account with Western Union can take 4 to 7 days and cost upwards of 50%. But with Strike in your checking account, it actually takes 1 to 2 seconds and is free. And can I develop that experience? And then I'll stop there. But that's like a lot of the beginning insights of the whole concept.
Yeah, and the result is that this is the fastest way to become to make a Cash App user in the US interoperable with a Revolut user in Europe, right? It's very difficult for them to send money to one another across borders because those are incompatible closed silos that don't work with each other. You can't sell from Cash App to Revolut, but with Lightning Network, you can.
Yeah, exactly. And as you go down, this is almost like a particular rabbit hole within the ultimate wholesome rabbit hole. But you start to realize that like there's so much precursor work that has to go into this. First and foremost, we have to have an asset that's digital. It's a precursor. There are implied costs to transferring anything physical. If you think about the communication transformation with the internet, I mean, it wasn't free for us to consume and receive communication in plain text. I mean, delivering a newspaper incurred costs and incurred employing a paper boy and employing printing of the paper, right? And now, like Twitter is a free product for me, and so and it's because it's digital. It's because producing that text to the world and distributing it to the world doesn't require a paper boy. And so first we have to have a digital bearer instrument where the instrument's actually bare. It's not a sense of credit. There's no balance sheet float. The Bitcoin is digital and it's bare. You then also have to have that asset that lives external of any central party, any government, any company, and so that it can be freely accessed and open to the entire planet. It can't live within borders. It can't be regional. It can't be localized. It cannot be controlled because then it infers that it operates 24/7. Then the free market takes on the responsibility of providing liquidity for it at all times, and that liquidity is inherently competitive. And then you start to, if you compare it to the internet, you start to realize the price suppression of a natively digital asset that's free all the time. The market is the ultimate competitive market, so pricing is going to get driven down just based on competition and opportunity. It's the utmost competition, by the way, because it's easily accessible and it's global. And you start to realize all these things, and that's the precursor that is required then to build a protocol on top of it that allows it to achieve that cash bearer instrument finality instantly and at relatively no cost. And you start to mentally piece these things together, and you're like, holy cow, hold on a second. Like this, it destroys Visa. It destroys Western Union. And in the same way that all of these things are optimizing and solving for the same problem, but they're bifurcated and they're segregated because the cost that's incurred for them to be performant of the experience is so expensive. Why don't I use Western Union to buy my Starbucks? It's too much of a bear for them to even think about that because the cost of them to hold euros and Nigerian naira and everything all over the world and take on that float and that cost just for remitting payments is far too much. And so in the same way that why wasn't my newspaper company the same way I listened to radio in the 1800s? If I wanted to send a message to a friend on the street, I would carriage a horse. But if I wanted to stream radio, it was a different company. But now Google and YouTube is how I consume TV. It's how I consume audio and podcasting, right? It all gets dematerialized onto the same anyway. So I think that it's tremendously fascinating concept and development where I really 2-3 years ago, I wasn't privy to this concept of Bitcoin, the network, and the disruption that it could carry. And it really has been a mind blowing journey for me, to be quite honest.
Yeah. And so on the recipient end, it's not just that you allow people to, you don't have to have a bank account and an app that's KYC and connected to Revolut or to your bank account. It's also possible to have stable coins, right?
Yeah, stable coins. Here's the important part about, so yes, so for example, the product we offer in El Salvador utilizes Tether, for now at least. But a really important concept is that the network is open. And so that anyone can be interoperable, anyone can get access to Bitcoin, anyone can mine Bitcoin, right? Like it's this concept that it is open and there's no central authority that deems access to this thing. And so not only can the recipient receive stable coins, could be linked to a bank account, but it could be another service or product that isn't authored by myself or my company, right? And that is such a powerful concept. And so that we can perform a financial service with another counterpart without having an MSA to sign, without having to do due diligence on each other's balance sheet, to assess the credit risk of that counterpart, to understand, well, their jurisdiction has different laws or different whatever. And so that we don't feel comfortable and confident that if we go belly up or they go belly up, we'll achieve some form of settlement that is comfortable for our shareholders. It doesn't exist. There's no chargebacks, there's no credit risk. All of those things were solved with cryptography. And so there are no necessary intermediaries, which obviously the first intuition is going to drive and suppress pricing. Then the other is that in an open system like this, the network effects and economies of scale are just unprecedented. Someone spun up a Lightning Network interoperable service in Nigeria, and our volumes exploded to that service because now remitting money to Nigeria is instant and free. But I didn't build that in Nigeria. Like my service got more valuable and someone's able to hook into us. I didn't meet their lawyers. I don't know the first name of the founder. They just, the standard is open. It lives open. And as soon as you integrate with it, you're interoperable with everybody else. So it's mind blowing concepts in that sense. Never seen before in money, by the way.
Yeah, absolutely. This is the key. I mean, it's kind of like Linux and the basic building blocks of operating systems and the internet, where eventually, the open the open networks win because it's just cheaper and easier for everybody to connect on them, and the proprietary network is always hobbled basically by the fact that you're trying to optimize for you making money, and the consumer is trying to optimize for them having a quick and satisfactory experience.
Yeah, that's it's internally really important at Strike, and I've been vocal about it as of recent. Is that it's very easy to understand if you just look at history. That in open networks, the best experience and the best brand wins. That's why I use Facebook and not MySpace, for example. It's not who gets there first. And Safe, you're exactly right. The consumer is optimizing for their experience, and there's a misalignment in incentives for a Visa, for example. And that's why a lot of our financial experiences to date, or our nation states and our government, right? And a lot of our financial experiences, the incentives are just totally misaligned, to where open networks realign incentives in a very powerful way. And so, Facebook, Twitter, all of these internet companies are constantly optimizing around the brand and the experience, and that's what deems them winners. And so we think about it the same way. And I think that that's a very, 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 very powerful concept. It's going to be really liberating for the world is if there's suppressed pricing and an open free market competition for financial experiences. It's where the consumer holds all the leverage and the power, and it's going to be very easy for them to switch. The problem that I have is when I walk into Starbucks today, if I ask the guy next to me, how you paying for your coffee, it's a very dumb question. Cash isn't even allowed in the US right now because of COVID. So it's either his Visa card or his MasterCard. That's it. There are no other options, right? And so it doesn't matter how much he hates the experience and the fees and the limits that are implied and the information and data mining that these companies do on him. He doesn't have the luxury of choice. In an open system, if Starbucks were to have an interoperable Lightning Network QR code checkout or some form of checkout, how am I paying for this coffee becomes a fascinating question. I use Strike because I don't want to spend my Bitcoin because I get my direct deposit there. Or I use Coinbase, or I use maybe Visa becomes interoperable, or I'm a cypherpunk. I value my privacy highly. I have a node running over Tor in my basement that I'm buying my coffee with. And the consumer now has the power and luxury of dictating their preferred experience. And then that's when the market gets extraordinarily competitive over that experience and optimizing for what the consumer wants, as opposed to, Visa has this monopoly that they've gatekeeped. And when was the last time they optimized for the issuing side for the consumer? I wasn't born. So I really think it'll do a lot for like the health of society, for privacy, basic human rights. I'm excited for the day that I can walk into a coffee shop and it's really up to me to be interoperable with the monetary settlement standard, as opposed to having two options that ultimately are incentivized to use my data and the quality of my life to monetize.
So basically, what you're saying is similar to what Apple did with Unix, right? You're building on the open system, open standard, rather than following the Microsoft model, which is let's try and keep everything proprietary and keep charging people every time they click on their keyboard.
Yep. Yeah. I have two funny stories potentially about this. One, I think that what El Salvador did, and we can get into that topic, they leveraged that concept very heavily. And that was part of our conversations very early on. And then another with Twitter and some of the other larger partners we're talking to is the story is very similar to Linux and Microsoft. And, history doesn't necessarily repeat, but potentially rhymes. And what's fascinating about what's happening with Lightning is first, these companies are realizing, hold on a second, there's a monetary network where this kid in the hoodie is telling me, let me make sure I'm hearing this right, that people can check out at my coffee shop and I get instantly spendable, irreversible dollars. There's no concept of settlement delay. Those dollars aren't accessible in 2 weeks and that's why it's cheaper. No, the bearer instrument settles instantly. You get those dollars, you can go spend those dollars at the pub right away as soon as you get them. Okay, fine. Is there any MDR? Is there any interchange? Is there any intermediaries taking a cut? No, there's no concept of MDR or interchange. It is
What's an
absolutely cash
MDR?
final merchant discount rate. So
Okay.
Visa, for example, will charge typically 2.9%, 290 basis points, and we'll get into why those costs can't go any lower. But um, so merchants are blown away by this. And so right now, and there's the concept that you plug into this thing and you're interoperable with everyone else on it. So let's say Coinbase, Cash App, and Venmo all turn it on. Well, there goes 300 million, larger than Visa, accessible consumers that can check out, and you get to achieve finality with those consumers with no interchange, no MDR, no settlement delays. And that is a world without Visa. That's a beautiful world because I can also check out with my Tor node. I can also check out with my non custodial. I, as an individual, have human rights and privacy standards that are abided by. And it's up to me on how I want to live my life. That's a fantastic world, and everyone's aligned and incentivized in that way. And so, what you're starting to see these bigger partners, and we're talking with, I think it's very similar to the Linux story, is back in the day with Linux, these companies would kind of flirt with it against leverage against Microsoft. It was initially it was like, we're going to flirt with this thing, and yeah, it's not widely distributed yet. Yeah, it's kind of like this cypherpunk nerdy background. It's open source, but it's much cheaper, but it holds better moral principles. And so Microsoft, those really expensive pricing that you haven't revisited in the last decade, you should probably bring those down. You haven't launched a new feature in 3 years. You should probably start launching features every 3 months. Your customer support takes 2 weeks to get back to us. It should probably be 2 hours, or else there's this free emerging thing that's growing very fast because it's open and right. And that is the beginning stories of Linux, is these bigger partners were just leveraging it at first to negotiate with Microsoft. And then the network effects, it took on a mind of its own. And I think you're starting to see the same thing here, is a lot of these large partners we're talking to, is they're just taking a meeting with Jack, and then you call Visa. Hey, you guys still want to charge 2.9%? You should listen to the podcast this kid just did. And you start to see, but then the network effect of then a country adopts it, and then Twitter adopts it. And then all of a sudden, before you know it, it's too late. Network effects, open network effects are the most superior and powerful concept. And so I think in that way, Linux is very resembling. And I think El Salvador is using the Apple model as well. So
Yeah, I like that story, but there's one sad part to it, which is that unfortunately, Microsoft still exists. And not only does it exist, but it's actually now the biggest company in the world, which is truly a tragedy for the human race, I think. It's a shame. It's a true shame that this monster exists. I've gotten rid of all Windows products. I wrote the entire Fiat Standard without using Windows or Windows word processing, and I put in a thank you for the in the acknowledgments for the programmers behind LibreOffice, because it allowed me to be free of using anything that Bill Gates uses. But the sad thing about it is that obviously, I think if you study the history of Microsoft, it's not that they offered the best product at any particular point. It's that they had the best lawyers all along. That's what they've done. They've always just been good at taking other people's software or bringing the best software in and then combining it with the best lawyers and using intellectual property, which we've discussed in this podcast before. We've had a couple of podcasts on intellectual property with Stefan Kinsella. We're not fans of intellectual property laws. We think they don't help innovation, and they stifle it, and they result with somebody like Bill Gates being the richest person in the world when all they're doing is just sicking their lawyers on other people. So what is the threat? Do you think there's a similar threat in Lightning and Bitcoin, either in terms of maybe the incumbents like Visa and MasterCard being able to use intellectual property to stay around like Windows, or maybe there's going to be a Windows that's built on Lightning and Bitcoin that's going to you know uh, build a proprietary closed network, and then we'll get a new Bill Gates and we'll just be stuck with him declaring pandemics and shutting the world down and
Yeah.
getting richer on our backs for the rest of our lives. What do
Hmm.
you think?
Um, I don't think it's I think it is maybe a little apples to oranges. If I had to voice any concerns, um, it we have to be very careful about the standards we deploy. I mean, the whole thesis and concept is that there's one singular standard for the world, and that standard is tremendously accessible, and that it takes a mobile device to have vertical financial services, and that any entrepreneur can integrate the standard with relative program knowledge and develop a competing service, right? Like the reason that Lightning at Starbucks is very scary for Visa and MasterCard is I don't have to use them for Starbucks to achieve finality, and I don't have to use them on the issuing side and use my bank's debit card. And that's a very fearful world, is where they have to compete with the experience and right. And so what like a fear I have potentially is something like LNURL, for example. I don't know if you're familiar with the standard that's being flirted with. It's awesome. It provides a lot of functionality on top of the Lightning network. But one of the trade-offs it potentially makes is it requires a web server to be interoperable with. It optimizes around web standards, and I think conversations like these are tremendously important, because my kid eventually, I mean, I'm 27 years old. I don't have a kid, but to say like 30 years from now, my kid's going to be scanning these QR codes. And so I think these conversations and optimizing around avoiding a Microsoft scenario potentially are important, to where VAL URL gets widely adopted. We don't want a web server potentially. Maybe we do, maybe we don't too. But we don't. The theory is we don't want a web server to be required to be interoperable with the monetary standard of the world, because a web server potentially incentivizes and implies some form of centralization, where it's easier to just subscribe to Stripe's web server instead of spinning up your own. And there's a required quality of hardware and access to maybe everyone in the United States by the time there's an iPhone 42 can have like a fully functional computer in their pocket. But what about the other 4 billion people in emerging markets? Like, are they going to have the hardware accessibility to run a web server that deems this standard viable? And what incentives and centralizing implications are we, if I were to go integrate this into Twitter, for example, what am I saying to the world and to the future of this protocol, to where eventually being interoperable with Lightning is just having a Cash App account or a Strike account or a Coinbase account, as opposed to building your own wallet in your bedroom and being able to have all your friends like run it on their phone without some like heavy setup or some centralized service that's hosting it for you. So I don't think LNURL, let me be clear, is like some uh, outside lethal threat. I don't think it's a malicious. I think it's a fantastic experience. But these are the type of things I think deeply about when we're talking about a protocol that we want to last a couple centuries and avoid centralized forces. Because also, I mean, centralized web servers, of course, are very easy regulatory chokeholds. And if someone wanted to come over the top and enforce anything that could be damaging and malicious to the movement that we're trying to deploy. So these are the type of things that like go through my mind as potential risks, is as we develop new standards on top of Lightning, and it's just important to measure those trade-offs. And I think one last thing I'll say on this is For the base layer of Bitcoin, something like SegWit 2x, Michael Saylor famously dubs the cyber hornets come out and sting you. And I think that the cyber hornets have the ultimate incentive because the value of Bitcoin is ultimately one of, but ultimately derived from its scarcity and its predictable issuance. And so we are ultimate defenders of that, because if we don't defend that, then the whole project is deemed dead. Lightning doesn't have the same attitude and cyber hornetness because it lives external of the base protocol that enforces the monetary policy. So I also wonder, a lot of my thinking recently has been about how do we have open communication about the trade-offs of standards developed on top of it, and have honest discussion about it, and come to some form of consensus around a singular standard that can last 100, 200 years, because there aren't the necessary same cyber hornets that are defending the monetary policy. These are, there's a different set of incentives and different kind of corporate structure that lives up there on the layer two. So if I were to voice any concerns, or not even concerns, just stuff that stews through my head of like, how do we end up in an overregulated, centralized choke point world of this monetary network that took like a left leaning step? It would be something like accidentally deploying and spreading standards that enforce centralized incentives accidentally, and just being patient and transparent and communicative about all of our efforts and ideas.
Yeah, I think I agree with you because I think Unix, the Unix operating system is great, but it's missing one thing that Bitcoin has, which is number go up technology. It doesn't have a way of making people who use it and run it get richer over time, and so that makes it a very unfair fight against Microsoft and their lawyers. So there's always going to be money to be made in. Taking things toward a closed system, and that money can finance all of the horrible things that Microsoft did to open source software. And open source software people can't fight back because I mean they can to an extent, but it's much harder when they're not being financed. But if you look at something like Segwit 2x, I think is the great example here, because with Bitcoin, the nodes, they were not utterly dependent on these companies. So even though we had the majority of mining hashing power, we had the majority of mining manufacturers, the majority of exchanges, the majority of wallets. I mean, I think you could credibly make a claim that 80, maybe 90% of Bitcoins and addresses, or I mean, different metrics, were owned and controlled by people who are running these who were for Segwit 2x. A lot of people have their Bitcoin on exchanges. So perhaps in terms of the number of users, the majority would have just gone along with whatever Coinbase told them was Bitcoin. And that was really the threat. Coinbase just says, hey, we've upgraded Bitcoin and we have a better Bitcoin for you. And a lot of Bitcoin users on Coinbase would have gone along. But, the 10 or 20% that were not in this can't be disenfranchised with Bitcoin. That's, I think, I hope at least, that's the kind of insurance policy we have to protect us from a Bitcoin Bill Gates emerging.
Yep, I couldn't agree more. And I just think it's an interesting mental model to stew over, in that a lot of the game theory that's deployed into Bitcoin at the base layer that makes it beautiful doesn't necessarily scale as we build up layers, and Lightning will be one of many, right? And so I think that that's not a bad thing, right? I mean, Bitcoin at the base layer is a broadcast protocol. It's a consensus protocol. Lightning is a link-to-link protocol. It's more of a peer-to-peer protocol, and so it carries different characteristics and properties. It optimizes for different things, and I think that's fine. But you just got to be careful, and I think the community is doing a fantastic job. And so this is only because you asked me of a fear that I'm vocal about it. I wouldn't have otherwise been vocal about a fear. But if I had to be, it would be that someone, let's say like a Coinbase or someone malicious, shoves a web standard down everyone's throat and spends a lot of marketing money to deploy it, which then everyone gets interoperable and competitive and deploys it as well. And then we look back and realize that in order to develop a competitive experience, you have to have very powerful web servers or sufficient hardware that really prices out the little guy. And then regulators can come in and go, okay, where are all these centralized web servers that people are operating within, and then let's go regulate them and choke them. And so I think we should just keep ourselves honest there. Uh, and it's just not the same incentive because it's not defending of a truly scarce, finite supply of an asset. Right now, it's more just out of like moral principle and fighting for the future of humanity. But to your point, like maybe there's a corporation that's financially incentivized enough to have your lawyers go after those that are willing to fight for humanity. And if history tells us anything, that's a harder fight than it sounds. So anyway, but I think we're doing fine so far.
Yeah,
Actually, so far, so great. It's a tremendous achievement what Lightning has accomplished so far.
absolutely. And I mean, I think it's astonishing what's been done in El Salvador. I mean, I think initially we had a seminar where we were discussing it, and there was a lot of um, reasons to be skeptical. Governments mess everything up, and surprisingly, they haven't messed this one up. Uh, I mean, there was, the Wall Street Journal and the Fiat Press was eager to magnify every story of, this guy's app was glitching on his phone, was making headline news all over the world. But really, millions of people in El Salvador downloaded Lightning apps and they're running them and they got their $30 and some of them cashed them out and they could get them out. And there was no lockup and some of them didn't and they're still transacting. And the amazing thing, it is an open network. Their wallet is interoperable with all other Lightning wallets. So the Chivo wallet that they're using, you could send money from it or to it from or to a Strike app or any other Lightning app, right?
Yep. Yeah. What's most fascinating about, so we had like Michael Saylor come into the industry and really articulate why Bitcoin should be used as like a treasury reserve asset. I mean, it's a fantastic phenomenon that he really ushered in and authored. But I think what's most interesting is El Salvador helped author a different one that, you would intuitively, if I would have told you in February when Saylor was doing his rounds on the podcast, that a country adopted Bitcoin, you would assume that they just used their reserve assets and aped into a large size position, which not that El Salvador isn't doing, they're actively acquiring, but the true innovation that they saw is as a monetary network that was sufficient infrastructure in a lot of ways. And so when I went there, there was no Chase Bank, right? No one had a bank account because the infrastructure there was so bad. So in the US, we went from Cash Standard to this banking layer that we're all familiar with. And now we're even exceeding that to the Cash Apps and the Venmos, to where 18-year-olds now don't ever walk into a regional commercial bank. They just download something on their phone. And then eventually we get to the Lightning Standard. El Salvador found a way to almost kind of jump over the banking layer. They were so far behind, and they saw this as a way for the entire country to achieve finality with no reversals, no MDR, no interchange, no central authorities that could hire a bunch of lawyers and deem the experience of their civilians. It also is the most accessible monetary network of all time. So along the coast of the country, people that don't have bank accounts, people that don't have access to high quality Wi-Fi could still use their mobile phone and LTE connection to be interoperable. And then the last thing that I think is so fascinating is that the government very well understood the open network properties that you just described, Safe, and that they understood that, listen, this is very similar to an effort in India called UPI, a Unified Payments Interface. And the government in India mandated this payment standard across the country. And all this innovation is like, this is how monetary settlement is. It's a singular static QR code, so to speak. And now you saw a bunch of companies founded and built on the acquiring side, on the issuing side, and dozens of companies, and the economic activity flourished, and a lot of disruption, a lot of innovation, a lot of price suppression, a lot of new optionality for the consumer and competing for that experience. And it was healthy for the country. Now it wasn't open, it wasn't on Lightning, but it was really impressive, honestly, for a government to really author that and act in the best interest of that economic activity. And for the biggest company in India at the time, Paytm, Berkshire Hathaway was a private investor. They were in the tens of billions of dollars in valuation. They just got utterly disrupted. They went from number one by a long shot to number four in the order of 24 months. And so you can see what like a singular standard network effect has. But and then, conversations I had with the Salvadoran government, is they don't have those resources. There's 7 million people in the country of El Salvador. It's like the size of Manhattan. They don't have like a, and Brazil did the same thing with PICs, and a lot of governments are doing this, but El Salvador realized they don't have like a Stanford University to go poach newly birthed energetic engineers to build like some financial proprietary revolution for them that they can then go mandate. There was no infrastructure there. No one had a bank account. Nobody had any way of connecting with each other. They don't have the same. I mean, they're smaller than the bigger cities in the United States. But what they realize is that if they leverage Bitcoin and Lightning, do you know who's working for them all of a sudden? Me. I'm their employee. Jack Dorsey is their employee. Michael Saylor is their employee. Talk about a star-studded team. Michael Saylor is going around and marketing your monetary asset, monetary infrastructure every day on national TV. It doesn't get better than that. So, developed financial country to one of the better, most advanced, forward thinking, and actively developed financial infrastructures of all time. And they use the concept of just plugging into an open standard. We're just going to be interoperable. We're going to be vocal about it. And then the Bitcoin core devs and the flashy entrepreneurs that are graduating from Stanford and the Michael Saylors of the world are going to carry us to the promised land. We can kind of just kick our feet back and leverage the rest of the world as opposed to relying on maybe resources that we aren't necessarily privy to. And so,
Yeah, it's amazing, and it kind of helps us in the it it's a huge step forward in the attempt to make sure there's no Bitcoin Bill Gates. We have already got a country and many corporations already using it, and they're all going by the same Lightning network. They're all interoperable with one another, and I think we're probably achieving escape velocity on this. We're not going to get somebody managed to come and we managed to make this thing big and distributed enough with enough Bitcoiners and enough wealth. There's already about $1 trillion of Bitcoin, and the Lightning Network keeps growing. Probably too late for somebody to try and come and make a silo around it. And I think El Salvador was a huge part of that, and your work with them. And you're absolutely right. I think the advantage, I think, from an engineering perspective comes from the fact that if you wanted to build a bank, the traditional model with a bank is that you have to have a brick and mortar location. You have to have people who work there, and they have to meet and shake hands with the people and know who they are, know where they live, and know what they do for work, and then get to know them, and then start giving them credit. And it's that it's a manual process where every time they make a transaction, the bank needs to approve it, and there's KYC, there's all of that stuff. And you replace all of that with cryptography. It's amazing. It's like going from landlines to mobile phones. Mobile phones there's so much less infrastructure needed to make a mobile phone network work as opposed to landlines, which require extending wires all over the place. It just, a lot of African countries didn't get landlines. They went straight to, or at least big chunks of African countries didn't go to landlines. They just went straight to mobile phones because it was much cheaper to build a mobile phone network in the 2000s than it was to go with a landline. And I think that's exactly what El Salvador is doing, and it's amazing. It's working out fine for them so far. I mean, the haters obviously are going to hate, and Bitcoin will always have haters because it's ruffling a lot of people's feathers. But really, I think the all of the anguish that people have about, oh no, it's legal tender, they're forcing people to use Bitcoin. 200 countries in the world, every country has a legal tender. Every single one of them imposes a legal tender. If you're not bothered about El Salvador imposing the dollar as legal tender, why are you bothered about it being Bitcoin? It must be, like you think about people like Selgin or Hanke or the Cato Institute. They didn't say anything when El Salvador imposed the dollar as legal tender. They didn't call for El Salvador to give people the freedom to choose whether they want to use gold or silver or dollars or euros. Back when they adopted the dollar, that was considered okay. And Hanke himself is always going on and telling people to build a currency board, which is effectively going on a dollar standard. It's just a second layer dollar standard. So, I mean, personally, I'm against governments interfering in the money market, but I find the imposition of Bitcoin no more objectionable than any other imposition of any kind of medium of exchange, and governments all over the world are doing this. And so I find it extremely disingenuous when people are, suddenly they turn into libertarians and hardcore anarchists when it comes to Bitcoin because it's non-inflationary. But when governments all over the world are imposing the inflationary currency that pays for their bills and for their salaries, then they're fine with that. So if you're being realistic, I think it's now been several months that this. When did they start it? It's 2 months now since El Salvador has done this, and uh, yeah, the opposition in El Salvador would like to say that it was bad for whatever reason, but it's just given people a big option on. A big improvement in terms of the amount of financial freedom that they have. They don't have to use the dollar anymore. They've got more freedom now.
Yeah, and I mean, there's very practical examples of that. I was living there, and in order for you to go pick up a remittance payment or even pay a family member back, I'm telling you, the concept that they didn't have a bank account means they didn't have Cash App, they didn't have a Revolut, they didn't have anything. So it's a 6-hour bus ride to get across the country to pay a friend back. And so inevitably, you settle up at Thanksgiving. I mean, this is real. And so now all of a sudden they have a monetary network to achieve finality, and they can choose the experience they want. They hate the government. They don't want the government spying on them. Download a non-custodial one. It doesn't matter. It's all interoperable on the standard. That just it inherently, plain as day, the next second it was deployed, enhances the quality of life of everybody in that country. It was just plain day innovation. And yeah, for the first time, Aaron Rodgers and Saquon Barkley, a lot of these professional athletes in the U.S., Twitter, a very unicorn age San Francisco based internet company, and an emerging market like El Salvador are all shareholders of each other and all cheering for each other's success. Um, is Aaron Rodgers have a keen interest in PayPal? No, right? It's different. Is that Bitcoin carries that network effect where it's really remarkable, that network effect. And then the last thing is the fixed cost, and you're describing the legacy financial institutions and how the cost of a bank, brick and mortar, and all the regulatory and compliance and operational just sunken costs to deliver the experience. It's really why Visa, Visa, a lot of people are like, well, what's going to happen when you guys get big enough and Visa just starts charging 0.9%? It's like, joke's on you, man. They can't. They cannot. There's a 30-cent swipe fee. Do you think that that's all 30% or 30 cent of margin that they cash profit on? No, of course not. If Visa could unlock and enable a new market on the internet where there's no swipe fee, where people can be tipping each other pennies, that's in there instead. The fixed costs and intermediaries that are required for the legacy financial system, because dollars aren't digitally bare, because pieces of paper can't travel across borders and thousands of miles instantly and at no cost, there are sunken costs to the balance sheet float, the capital float, the regulatory requirements, the credit risk and assessment to take on that counterpart risk and assess that and pay people to constantly deploy algorithms to understand the credit score of a consumer and their viability of reversing a payment. That's tremendously expensive. You want to know how expensive? 2.9%. That's exactly how expensive it is, because that is how expensive it is for them to cover their costs and run a profitable operational business. And so all of that is now gone. It's now gone. You can achieve finality for nothing, with cryptography. And so Visa can't come down. These banks can't compete. You have to become interoperable, or you'll die. In the same way that it was like, what if the newspaper paper boy starts lowering his pricing? The internet's going to have to compete. What are you talking about? What are you talking about? It's just not a thing. You either get on the internet and start publishing your newspaper on the web, or you're going to go out of business. It's just plain as day evolution. So
Yeah, well, that brings us to the Twitter tipping app. I, I'm a little bit convinced me of this. I'm still not entirely sold that this can't be done with Visa because, if Twitter just, if everybody has an account with Twitter and they have your credit card info, then they're just running a second layer Visa network or a third layer dollar network on top of Visa, where everybody can tip everybody else, and then you can withdraw it to your Visa card at the end of the day or at the end of the week whenever you want to. You don't think that that would be viable with fiat?
So they do that. Actually, they have, so inside of Twitter, you can link your Cash App, and you can link. I know that it's a U.S. based product and service as it is now, which is one of the advantages of Bitcoin, is that the only global monetary product that Twitter has to offer is the Lightning Network, because scaling these independent bifurcated networks all over the world is a tremendous hurdle for them. But it is. But in order to make a Visa payment on top of Twitter, it costs 30 cents minimum for the swipe fee. That's Visa's cost of, like, what if you tip someone and you reverse it? You tip someone, they withdraw it to their bank account, and then you reverse it. Visa's caught holding the bag, and so they need to charge and assess the credit. So I also think there's a lot to say about the open network effect of the entire thing. So I mean, Twitter's, I would assume, I don't want to speak for Twitter. I have to be very careful speaking of lawyers and everything. But Twitter's uh, ambition eventually is to be interoperable and interface with monetary functions as a whole, right? So in the same way we were talking about earlier, where the best companies on the web ended up winning the best experience and the best brand, and we're very performant and optimize a particular consumer experience. And I think a lot of these internet companies are realizing that that evolution is happening for money right now. And so Twitter wants to, why can't I go to Starbucks very soon and check out and pay for my coffee with my Twitter account, right? And if we were all just using Visa credit for that, that would assume that we're all just ledger entering on Visa for everything, for every merchant, for every, like, why can't I remit money from my Twitter account to my friend's TikTok account in Japan? And so there's no 30-cent swipe fee. And anyone, so for example, there's potentially a company in other countries that are going to be interoperable and interface with Twitter. And that's not one company like Strike that has to put up the balance sheet float for all of that. It's really, to be quite honest, it's infeasible for Visa to have enough float and enough dollars in the bank account to put up and assess that amount of credit and that amount of activity for ledger entries. In the same way, Safe, that screw Twitter. Why doesn't Visa take on the remittance market? It's a massive market. Why is Western Union still viable as a company? If everyone has a Visa card, why doesn't Visa just ledger dollars and euros between everyone? It's infeasible. I mean, the balance sheet float and the credit assessment and the cost to be performant of that experience, it's so large and so tall. Visa optimizes for a very particular one, which is consumer commerce, right? And so it's an infeasible amount of cost for one company to do to support Twitter's 500 million active users in I don't know how many currencies in different countries and stuff.
Yeah, makes sense. Makes a lot of sense. So tell us more about that. About well, how did the cooperation start with Twitter? What was the idea there? Was it your idea,
They,
or was it Jack's, the other Jack's idea?
I never spoke to the other Jack actually about this, although I'm sure he had some influence. They reached out to us with just the concept that they were interested in this creators marketplace, and right, like the concept of a creator is very interesting to these internet companies, and they want to allow creators to monetize, and it's potentially a new revenue stream for them. They've been very vocal about these ideas for me, where the internet companies are fascinating because the internet is an open network, so they come with these network effects, and because they're the only companies in the world that can build one product that has a target audience of 8 billion people. And right, like the bar down the street can have better customer service than Twitter, higher quality product, better beer than Twitter could ever offer, but their target audience isn't 8 billion people, and so that's why they're not a public company trading in the tens of billions of dollars. That is the power of the internet. Now, the downside of the internet is there was no native currency, and the most profitable businesses in the world are financial service firms. That's Money is the most valuable product of all time, and the internet never had a native access to perform financial services for their users. And so the downfall of the internet, I called the rebranding of Facebook on a Peter McCormick podcast 6 months ago, is because the downfall of the internet is the user is their customer, and they have to lie and abuse their data and abuse their privacy rights. And the founders of the successful ones appear in front of Congress every quarter because they're breaking the law constantly to turn an internet experience into a business. Now, on the counter of that, financial service firms are some of the more profitable, margin intensive, and better brands in the world. The Facebook brand is terrible. Everyone hates Mark Zuckerberg. The Cash App brand is fantastic. Rappers rap about Cash App. They wear their clothes. Cash App's margins are fantastic. But Cash App, unfortunately, doesn't have a target audience of 8 billion people because it's regionalized to the United States. And so my thesis behind Bitcoin and the Lightning Network is it's a marriage of both. On Bitcoin and Lightning Monetary Network, you have the target audience of 8 billion people, but you're able to perform them financial services to where your users love you and your brand is fantastic, right? And so my conversation with Twitter was exactly that. My conversation is, if money is going to turn into an open network, just like the internet, and it's the best experience and best brand that wins, Twitter is very well positioned. Twitter has an existing network, an existing brand, and an existing experience that people very clearly love, upwards to the price tag of $50 billion. And so you guys should plug into the open monetary network and start getting competitive for that experience. And it's not regional based. It can be in theory accessible to all 500 million of your active users, right? And so there is a world, very increasingly so, where a retailer can show an interoperable Lightning QR code for you to check out with. Why can't that be you? You should compete for the consumer experience of paying and checking out with that. Screw Visa, screw these guys, right? Like, why can't that be you? Because Facebook's going to hop on board, TikTok's going to hop on board in the same way that anyone could build a social network website. And so that was kind of my beginning conversations with them, is that you now have a monetary network. There's no middleman. A penny could be tipped. $1 million could be sent. It's on the issuing and the acquiring side. And all you got to do is be interoperable and compete for the experience. And Twitter is so well positioned to compete for that experience. They won a large portion of the internet. So that was kind of my pitch in the beginning. And we launched what we would call probably like a MVP of V1, so to speak.
Yeah, I really like the I mean the way you approach these things is just it's like there's a messy desk out there and you just clear it all out and you start from scratch. You know, how do we go with the simplest solution, the biggest network, and just integrate it so that it's my favorite kind of engineering because it's kind of like lazy engineering, and that's the best kind of engineering, you know. How do you do it in the simpler way? The simplest way you do it is the way in which the way that involves the least number of things potentially breaking, and it's the way that allows you to run further. um,
Mm-hmm.
so integrating with Twitter fits very well with that. I think that's beautiful. All right, so one thing that you alluded to is the pay me in Bitcoin stuff.
Mm-hmm.
How did that come about, and what's your idea about it? I loved your explanation of the inflation aspect motivating
Yeah.
that.
Um, I mean, so first of all, at Strike, not only do we have this thesis about the monetary network, but we have features and services that optimize around the asset, right? Like, we let you buy Bitcoin for free. Like, we don't charge any fees. We allow you to receive your paycheck in Bitcoin. We're launching a card that will have Bitcoin rewards. And so, from my vantage point, I'm trying to build the best financial experience in the world. I think the best financial experience in the world allows me access to this asset in a variety of ways for as cheap as possible, and allows me to be interoperable with the best monetary network on the planet. And so, the Pay Me in Bitcoin product is along that thesis that allowing a consumer to get paid in the hardest money ever is going to be a required demand by consumers over the next decade. It's going to be an absolute, and you're already seeing that, right? Like, everyone's copying it, Robinhood, Coinbase, and Cash App, and so I think that trend will continue. But it all started. It started based on my relationship with Russell Okung, a former NFL player, and the discussions we had were around inflation and also just how do you save money. And obviously this crowd, and you, Safe, in particular, are the expert when it comes to this concept. But it was, what if I told you this, Safe? What if I told you, jump off of a 5-story building, and I'll give you $10 million? And you'd say, well, I mean, $10 million sounds appealing, sure, but like, I could lose my legs for the rest of my life, and like, maybe I get a concussion and I forget my wife's name, right? Now, what's the difference between that and being an NFL linebacker? Not a lot, not a lot. But that is the compensation package: is a 5-year contract, $10 million to go like a gladiator, bang your body against the best and biggest athletes in the world. And the average career length of an NFL player is 3 years, and no one comes out without long lasting injuries. And a lot of these guys don't even live long enough to die knowing their son's name. And so, on top of that, a 5 year contract right now with housing inflation in the United States, inflation this year for the United States to own a home is 24.5%. So if that compounds on itself for the duration of a 5 year contract, by the time you get your $10 million, your dream home is now doubly as expensive. Or your $10 million is now worth $5 million in purchasing power for real estate. So if I were to tell you, jump off a 5 story building, don't remember your son's name, lose your legs and live on crutches the rest of your life, not be able to walk stairs, wipe your own ass when you go take a shit, and I'll give you the money in 5 years, and everything that you want today will be twice as expensive. So I'm really only giving you five. I'm ripping you off. And that's driving home at this general concept that in life, we all perform labor, and involved in that labor is sacrifice. Like the boss that you hate, you got to take the public communication, public train. And there's some guy that's sick who's sneezing on you, and it's early and it's cold out in Chicago, right? And the money that I earn and that I want to save and persist and enhance the quality of my life, it's now known it can't be in dollars. And what should it be in? And there's an argument to be made that there's no other option besides Bitcoin. It's the most accessible, it's the most divisible, it's the easiest and cheapest to acquire and to store myself. And so for Russell, that we arrived at that destination, and then we wanted to extend that experience to all consumers so that non-working capital to live your life should be preserved and saved in something hard. And that is kind of like, I'll stop there, but that was the founding story of the idea of the product and why a lot of these athletes are interested. But then ultimately, every human being should be. And I'll say one more thing. I'm 27, and so everyone my age, um, the debt that kids today subscribe to in order to live what is deemed a normal life is disgusting, and it's really ruining society. By the time I was 18 years old, all my friends were in six figures worth of debt to get an education. Then you choose your career path based on optimizing around paying that back, not based on pure interest, not based on where your passions live. I know kids that wanted to be a historian. I know kids that wanted to be a flag football coach in their hometown, but they are accountants because they're trying to pay off $100,000 worth of debt around the time that they're legally allowed to have a beer, which is asinine and disgusting. And then by the time they pay off that debt, they have a wife that wants a big house. And then they subscribe to more debt in the form of a mortgage, in the form of a car note. And you end up dying owning nothing. You end up owning your education that you got when you were a teenager by the time you're 40. And you end up dying not owning your house that you raised your kids in. And then the decisions you make in your life, who you decide to marry, how you decide to spend your time, what job you decide to lean into and invest in is not your decision anymore. It's optimized around the debt that owns you. And so my pitch to everyone my age too is that like start saving, take a percentage of your paycheck that isn't required to eat and to pay your phone bill, and just toggle on strike and save it, and it allows you to escape the debt cycle and have a life that's optimized around you and your interests. And so that's why I think it's important everyone in America has that option.
Yeah, I agree with you. I think sportsmen, well, athletes in general, sportsmen and sportswomen, are particularly suited for getting into Bitcoin because it's the nature of their career that they're only earning in their 20s, maybe their 30s in some cases. And then they have to live the rest of their life earning a tiny fraction of whatever it is that they earn. Very, very few athletes can earn 10% of their prime earning afterwards. Whatever they do, they can get into TV, they can go into real estate, start a bar or something like that. It's not going to, the bigger they are, the more they earned as an athlete. Sure, they'll earn more in their bar or in their TV career, but it's not going to compare with what they earned as an athlete. And so, no matter how much money it is, a lot of people think, well, athletes are making a lot of money. They're making a lot of money. It's not a lot of money 30 years after retirement. If they,
Mm-hmm.
if they retire at 35, at 65, they'd like to live a decent life. The money that you earned 30 years ago, it's gotten so inflated, it's lost so much of its value that it's really no wonder. You look at a lot of the previous athletes, they do so well during their career, but it's difficult for them to maintain their wealth and to remain even, not even wealthy, not even rich. It's difficult to remain financially secure. If you want to be able to have a decent life, if you want to provide for your children, everything just keeps getting expensive. And I think, people who say, as Michael Saylor likes to point out, people who tell you, well, CPI is 2% or 3% or whatever, they're looking at the prices of the cheap things, but they haven't tried to think about it from the perspective of somebody who wants to secure themselves in a nice house for the rest of their lives. The price of the houses continues to go up at maybe 5, 10, 15% a year, and that's a lot. So your earnings at the age of 30, 35, they're not going to buy you a nice house when you want to retire at 60, 65 from your whatever other job that you took on. Think of 10% inflation 30 years later. There's not much left, the very, very little of that income is left. And so, of course, for them, the challenge then is to how do you work that money in a way that maintains value? And you don't, good luck, because then you're up against Goldman Sachs. Either you're going to have to outtrade Goldman Sachs with your own knowledge, or you're going to have to give your money to somebody like Goldman Sachs, in which case, also good luck, because you're also up against Goldman Sachs. They're going to take a lot of your money in fees. And it's one of the most pernicious aspects of the fiat system, which I mentioned in the Fiat Standard, which is you have to earn your money twice. It doesn't matter how many Super Bowls you win. You've got that money. Now you've got another career in front of you where you have to go out into the stock market, into the bond market, into the currencies, foreign exchange market, and win another Super Bowl up against JP Morgan and Goldman Sachs, just in order to keep that money for yourself
Yep.
available 20 years from now. If you want to if you get married at 35 and you have kids, and then you want to send your kids to college at 55, when you're 55, 20 years later, good luck with, no matter how much money you earned, it's going to be difficult for you to keep all of that value unless you win the next Super Bowl, which is, going up against JP Morgan and Goldman Sachs in trading. Bitcoin fixes this in an amazing way. If you're an athlete, you put some of that money into Bitcoin, or hopefully more than just some, uh, you're secure, you're set. And it's amazing. I think even during their career, like the clarity that it provides them. I saw just how much Russell changed he talks about just how much it changed him. The fact that he could now go out there and focus on his field and not on his game, on his career, and not have to worry about the future, knowing that he's got Bitcoin secured. He's got his wealth stored in something that others can't inflate. It's beautiful. It's another one of the beautiful things about Bitcoin.
Yeah, and there's I think that the premium Bitcoin concept touches on both the Bitcoin standard and the Fiat Standard, both of your books, and where obviously the Bitcoin standard and its ability to secure value across time, but it also, there's something to be said about how accessible it is as an asset that's so performant in its ability to secure value. Because when you get to know and become friends with these athletes, so I know a solid amount at this point and have helped them through this journey. And when you take a look at their finances, yeah, they make 10 million bucks, let's say, over the course of 5 years. And we know that inflation actually implies that it's much less than that in purchasing power. Okay. And then they tax you on it at the top tax bracket. Okay. Then in order to outpace inflation today, you've got a financial advisor, you've got a real estate agent, you've got on the field manager, you've got an off the field manager. And then all of a sudden, when you look at these athletes, what they're left with is really, it's disgusting. And like what they're trying to outpace inflation by paying like an asset manager and investment advisor to like toss an S&P 500 index position to E-Trade. And if you understand that and when I gave them the Pay Me in Bitcoin product when it was in beta, and they were so confused, they're like, hold on a second, I just turn the knob and I submit it to the New York Giants, and then that's it. Then my wealth is secure. I'm like, yeah, actually, do you know how cool Bitcoin is? Not only can you do that, but the guy that delivered me my breakfast this morning, he could do that too. It's how accessible this asset is. This asset is divisible into 100 million pieces. It's accessible all over the world. It's accessible 24/7. You can't do that with gold. What am I supposed to launch? Pay me in gold bars? Pay me in commercial real estate? It's impossible. It is the most accessible and hardest asset. And there's something to really be said about that, is there were no intermediaries involved in these athletes. There was no one taking a 20% cut to put them in the position that they're in. they did it themselves, and it's the only asset that really allows for that flexibility too, which is like a remarkable achievement. And it goes to show what the cryptography and distributed network is dematerializing. What does Wall Street sell? Trust. I got a distributed network now and an issuance that's protected by a distributed network, so I don't necessarily need the financial advisor ever again.
Yeah, it's
So
beautiful. All right, Daniel's got a question for you. Go ahead, Daniel.
Hey, Saif. Jack, great to meet you. You guys have killed this. Saif, this is going to be one of the most downloaded apps. I think it's going to get retweeted around a lot. This has been absolutely amazing to listen to. Jack, I'm going to fire a question at you that I usually fire at my own guests on my own podcast, because I've not had the opportunity to do it to you yet, and I may never got the opportunity. So sorry, Saif, if I'm coming over the top here. But it's a question Saif's answered twice already, and Sailor's answered, and everybody else. And it fits in with what you guys are talking about right now. These high profile people, whether they're athletes, whether they are politicians, whether they are activists, whoever, well-known people, suddenly talking about Bitcoin. So Jack, if you had one orange pill left to give to somebody, who would you give it to and why?
Oh man, on the spot. Orange pill as in like they get it, or orange pill as in they list shitcoins?
They get it. They get
Okay.
it. Like everything you know about Bitcoin, they get.
Oh, I don't know if I've ever heard Sailor or Safe's answer to this question. I would give me 5 seconds. I know this quote's gonna live with me for the rest of my life, and I'm a young guy, so I gotta think about this one. I would maybe say, I guess the most what's coming to the top of my head is Mark Zuckerberg. So I'd be comfortable with that answer if I had to die with it, but I'm going to continue to stew on that one and maybe get back to you before I leave. But why I feel that way? I do think there's a danger in Facebook launching Libra, or I guess now Meta launching Libra. And there's a concept that Zuckerberg seems to be privy to, but not willing to admit, is that he has built the biggest country, or if he's allowed to issue his own currency, he's the biggest central bank in the world, the biggest country. He's the biggest president of all time. If you think about it in that way, I mean, he's developed a network, a country, a group of citizens that are heavily reliant on him to live a high quality of life. If you ever live in an emerging market, it's WhatsApp is how you communicate with each other. And so I think the mistake that he's making, if I had to sit down and tell him, is you're competing with the wrong people. Why are you trying to compete with central banks? He's trying to compete with the Federal Reserve, and they're never gonna let him issue money because they'd go out of business. He's got better tech, he's got better distribution, he's got more global users, and so he's competing with central banks. And so my advice to him is plug into what's open and use what's yours. And so I think he needs to not try and be the ruler of the world, because I think it's not only a battle that he's not going to win because he doesn't. The one thing he doesn't have as president of Facebook, speaking in country terms, is he doesn't have an army and weapons, and so he's never going to win. And instead, if he becomes interoperable with Lightning, he could do a lot of more prosperous things for the world, and not compete with central banks, but instead compete with the segregated, bifurcated 50-year-old monetary networks that are dead in the water anyway. So I think if he understood that, the world would end up being a much better place 10 years from now.
That's a great answer. All right, Stefano?
Yes, thank you, Saif, and thank you, Jack. It's been fascinating to hear you. So my question is the following. As we know, many governments are not very stable around the world, particularly in emerging markets and developing markets. So do you think it is possible for El Salvador to have a new government in place that simply decides to go back to the Fiat Standard? Or do you think we are at a point where, basically a point of no return, where this is going to be very difficult to do?
I would prefer to think the latter. Ultimately, I agree with Saif in that there's been a misconception that I'm huge fan of like nation states interfering with monetary markets, which I'm not.
Mm-hmm.
My advice to the government actually was just make it legal tender and don't even build an app. It doesn't make any sense. Like, what incentive do you have to ensure that the quality of your customer support is picking up the phone? I mean, you just try to get reelected, man. Like, don't build an app. That's just not the business you're in. But no, I think, let me put it to you this way. The United States didn't make Bitcoin legal tender. Strike's doing great. And I could download any non-custodial wallet I want and be interoperable. I think the effort that the president did was in the best interest of his citizens. He's doing his job, and he's ultimately, responsible for improving the quality of life and infrastructure of his country so that people can live prosperous lives. Ultimately, what we talked about too is that he was facing two really big problems. He had this massive immigration problem, and it was resulting in because of two things. It was one, there wasn't enough economic opportunity in the country of El Salvador. And because it was just a very inefficient economic system, it was very broken and fragmented. If you lived along the water, you didn't have a bank account, you didn't have Wi-Fi. And then the second is resulted in a lot of violence. And it was like one of the more violent places in the world. And so I think the president's doing his job in trying to increase the quality of life by creating economic opportunity and not having people leave or result to crime. And so do you have to? I think his effort was rooted in trying to promote this technology because he sees this as a way for him to improve the quality of life of his citizens and do his job as president of his country. But I don't know. I think the same is happening in America, maybe at a slower rate and a slower pace, but it's not legal tender here. So I ultimately don't think it's required. I think his efforts are very helpful and courageous, but I don't think they're required.
Okay. And Jack, if you can, are you guys working with other governments? Just as you did with El Salvador? You don't have to tell us the actual countries, of course, but
no, I think maybe the important answer for that is I don't need to. Like here, let me put it to you this way. Yeah, yes, I've talked to other governments, but not in any way that could be taken and received as trading advice that there's some announcement coming out. But if any government is listening, I'll give you advice. Make it legal tender. Allow or make abiding laws that allow people to build businesses more friendly. That's all you got to do. You don't got to build an app. There was no clever science that went into it. I wrote one line in the bill that I didn't actually get. It actually never made it in, but it was central banks cause economic harm to the stability of El Salvador. We need to allow for issuance of a currency that lives in a distributed network and that has fixed supply and a predictive monetary policy. That's it. That's all. Just be a fan of the thing. And then you'll benefit from Michael Saylor. You'll benefit from Safe writing books. You'll benefit from me writing software. And there's no real innovation to that. That's all you got to do. So if anyone's listening, I just talked to all governments right now.
Thank you, Jack. This is great. Thank you.
Yeah.
Theo?
Hello, Saif. Hello, Jack. Thanks. It was an amazing talk, and thanks for everything you've did in the past months. It was amazing to see from afar. How do you see the Lightning Network structured when we reach full adoption? And maybe a follow-up question: when will we see Strike rolled out in Europe?
Yeah, that's a good question. I know I'm going to get quoted on the second one too. For Lightning Network structured, can you expand on that for me a bit about what you mean?
Yeah. Like, do you see, for example, institutions that specialized in the business of managing liquidity across the network to just make the network as efficient as possible? And do you also see, for example, institutions like coming at you by creating native digital dollars that could flow directly on the Lightning Network, maybe with like another side markets to make a buck out of it? Because of course, because of the open nature of Lightning, it just makes no sense to try to make the end customer pay for that. This kind of stuff.
Yep. Yeah, I mean, the one-liner I've used that I think has resonated reasonably well recently is I think that Lightning is the internet of money, so to speak, when it comes to standards. I view the internet as a singular global relatively free or free and instant form of communication. And that in the same way, a tweet and also Googling what I want for dinner and also streaming a show on YouTube is all HTTP TCP/IP requests. They all consolidated on one standard for the world, and by remaining interoperable with the internet, you have access to communicate with everyone on the planet in a various mediums. And people optimize for the experience of those mediums and build businesses on the experience and the brands that they build. And I see Lightning as the same. It's a standard that's global. It's relatively free or sometimes free, and it's instant form of monetary settlement. And so if you plan on performing a monetary function or monetary business or service for someone, I think in the next 20 years, you'll have to be interoperable and interoperate with that standard, or your service just won't be as valuable or valuable at all to consumers, in the same way that no one goes and buys a newspaper unless it's for some historical context or like hang it up on the wall, but you don't actually use it to consume communication. So I think that very blanketedly, and how I think the actual, like, if there's opportunity for liquidity businesses and such, I mean, it's beautiful that it's open because it's a free market. And yeah, I mean, I'm actually very careful about like my LNURL comments. I think things like LNURL, we're going to see a lot of innovation, and it's open so that people can build what they want. And I think LNURL is actually great. And so I actually don't know what's going to happen. My favorite quote about Bitcoin generally, in particular to this question too, is my dad always told me that Bitcoin is universal acid, is what he said. The concept of acid, that whatever acid touches, it burns through and consumes. And so whenever anyone asked him when I was a kid, what's the world going to look like in 20 years with Bitcoin? He's like, I don't know, because I don't know what Bitcoin's going to touch. I don't know what the acid is going to encounter, but I know is whatever the acid touches, the acid burns through and defeats. So in that way, Bitcoin and Lightning is universal acid. It happened to touch the country of El Salvador. It happened to touch Twitter. It happened to touch the SEC and now a regulated ETF. I don't really know, but I know that whatever it touches, it's going to defeat. And I just don't know what that looks like on the other side, but hopefully a better world.
I think it's not necessarily defeat in as much as it is subsume.
Yeah, I love the concept of that universal asset. I use it all the time.
Yeah. All right, Nasser.
Hey, Saifedean. Hey, Jack. Thanks for coming in and thanks for everything you're doing. So my question would be, would you consider the way Salvador approached the Bitcoin proposal or the bill is the best way it could be? I'm trying to do the same thing for my country, so I'm looking at different models. Would you say that is the best way to do it, or would you do it differently?
I can tell you
what I meant by that. Yeah.
Oh no, go ahead, man. No.
What I meant is they're kind of scared. The government is scared. Obviously, Salvador did it like in a way that surprised everyone, even us as Bitcoiners. But they want to be not an enemy of world central banks and countries like that. So I'm trying to juggle this idea that I propose it in a way. Maybe you answered some of the questions to Stefano, and you said like just be friendly to Bitcoin, but I cannot just propose like just be friendly to Bitcoin to them. Would you have like anything?
I think that's lesser to do with actually implementing something of substance and more about branding and relationships. That's extraordinarily contextual, right? Of like a given country's relationship and reliance on somebody like the IMF, for example. Maybe that's what you're potentially alluding to. No, I could speak very transparently about my advice for the country of El Salvador, which again was strictly an advisor. I played no material role, and there's no contractual B2B agreement that I had or anything like that. And my advice was, yeah, make a legal tender. And there are certain things that they did that I didn't necessarily agree or disagree with. But like how quickly they deployed everything, I thought was so fast. The mandate that everyone has to be interoperable. That was an interesting decision, and the decision to build their own wallet was interesting. But I don't know. I really do think that if you make it legal tender, and ensure that innovation, businesses can subside there, innovation is allowed for, and that the country is generally supportive of businesses subscribing to this protocol and this standard. That's all you really need to do. And what you're unintentionally or maybe intentionally doing is relying on the network effect and the open network to carry a lot of the load for you. That's a lot of the thesis of why this is valuable, is that you can subscribe to the work of others from all over the world, and you don't have to, use the resources within you and fight the IMF yourself, right? Like there's no such concept of that. Is that it could just be another option, and this isn't going against any pre-existing efforts. This is just very simply another option for consumers that the government can be vocal in supporting, both by ways of establishing laws and just by speaking to the people. That was really just my advice to them.
Hey, my question for Saif and Jack is, can Bitcoin actually save the entire fiat money system from what looks like there's going to be a global monetary reset sometime in the future, or some kind of collapse or something? There's too much money printing, too much debt, not enough real assets. And with Bitcoin here now, isn't that like a new asset that's really, once people realize and money managers realize that this is a safe place to put your money, and it protect it from inflation and protect its purchasing power, then who cares about fiat anymore? I got a safe place to put my wealth and my savings for my future because I have a low time preference, etc. And I'll use the fiat to pay my bills because I have to,
I kind of that's kind of the conclusion of my Fiat Standard book, because if you look at how fiat works, it's all debt, and it's created through the creation of debt, and everybody's up to their eyeballs in debt. And so the devaluation of fiat is our way out. Bitcoin goes up and fiat goes down, and so everybody's debts get wiped out. And this is kind of counter to something that I wanted to mention to you, Jack, when you were saying, you're trying to get your friends not to get into debt. After Michael said, I used to be one of these people that always, told everybody you should be out of debt. But honestly, Michael Saylor and his kind of strategy will kind of force you to rethink that. And writing the Fiat Standard also helped me rethink that, because fiat is designed to devalue. So if you don't have fiat debt, if you have fiat assets, then you're subsidizing people who have fiat debt. And if you have fiat debt, you're basically benefiting from the way that the system works. Governments are indebted, banks are indebted. The richest, most powerful people in the world are the ones who have the most debt. And you want to be on their team. That's why there's inflation, because it's always reducing the amount of financial liabilities that they have, reducing the real value of the financial liabilities that they have. So it's going to suck for people who hold savings, but there's very, very few people in the world who hold cash savings at this point. And those who do are constantly witnessing their value disappear. So everybody should take on as much debt, and that creates more fiat. Stack as much Bitcoin as you can, and that's how we upgrade. I think this is how we upgrade from fiat to Bitcoin. Just make sure that you're not the one left holding the fiat bag at the end. If everybody gets in fiat debt, we just transition to Bitcoin. Everybody has Bitcoin.
Yeah, I think on the concept of my friends in debt, I agree with you. I think that maybe a way to put it is, I don't want them to be a victim of debt. I wish that they would weaponize and make use of the debt in a more additive way. Like maybe they want to coach flag football, and they should just run up every single credit card and debt instrument that they can, so that they can die with debt and they can live their true passions. But unfortunately, they become a victim of debt with the assumption that they have to pay it back. Little do they know that their favorite left-wing president is going to run this country into debt and have no intention of ever paying it back. So anyway, I do agree. But unfortunately, every 25-year-old is under the impression that their debt needs to be paid back. And unless you find something like Bitcoin, you're unable to outpace inflation and the life around you and the harder assets around you by being an accountant and saving in a savings account. I guess the other concept around hybrid Bitcoinization that I would mention, Browning, is I think very similarly to Michael Saylor, in that it's hard to envision a world that the dollar while I'm alive, but maybe not, because there's a lot of incentive and weapons that enforce the dollar. The dollar is ultimately backed by like a lot of guns. And so I don't, you know what I mean? I don't know that everyone is going to wake up and put the guns down and give hugs. I would love that. That'd be my preference. But I I think that there's some happy medium where people can have access to Bitcoin and save in Bitcoin, and that the dollar can be viewed more like it was on the gold standard. Hopefully that I live within that time frame. But do I think that the U.S. government's going to forgive the ability to tax citizens and just resign the concept of the dollar? I I find that hard to believe. Maybe.
Yeah. Peter has a question about what happens as the size of payments on Strike increases. So, what happens when people want to start sending each other $1 million over Strike? How do you intend to handle that?
Yeah, so I think firstly, you have to remind yourself, open system, we're optimizing for the experience and the brand. So for someone that maybe wants to one day want to make a $10 million remitting payment, maybe we use on chain and we bid priority and we do replace by fee. And we're constantly bidding to the top of the mempool. And then we charge the user the 69 cents that it took. Didn't someone just make $1 billion on chain transaction yesterday and it cost them the equivalent of 69 cents? And if I were to pass if Barclays and Bank of America were using Strike infrastructure to net settle each other of this week's worth of international transfers, and I charge them 69 cents to settle $1 billion, I think they'd be happy customers. So, yeah, I think subscribing us to strictly Lightning isn't true. We just believe that with Bitcoin as the monetary network for the world is more prosperous, fruitful, and society is healthier, and there's more opportunity. New economies will emerge. And so that's how I'd answer that. And I do think that there's an opportunity for me to make a fascinating point about Lightning. Here's another thing. So TransferWise is a remitting company that tries to offer a similar experience. The problem with TransferWise in theory is that the balance sheet float is so expensive. The cost of working capital is tremendously expensive. What TransferWise does is they hold an asinine amount of euros, an asinine amount of British pounds, an asinine amount of Nigerian naira, an asinine amount of US dollars. And then when I want to send $100 to Europe, they're waiting for someone in Europe to want to send the equivalent to the United States. And so they estimate that, and they always estimate it. We estimate this transaction will clear in 3 days. And if you want to send $2, they estimate it'll clear same day because they know that their consumers in Europe will likely want to send the same amount back, right? But if you want to send $1 million, they estimate 7 days because they don't know on the other side of the world how much that flow will cross, right? Because if I want to send $10 worth to Europe and someone else randomly wants to send $10 worth of euros to the US, then they just give the euros that are intended for my recipient to mine, and they give the dollars that are right. And so they're netting that across. All that to say that the expense of that is a lot of working capital required. You have to have a lot of euros and dollars and all these currencies ready. Here's why Strike is different in a fascinating way. Bitcoin is bear. And so we can swing around the actual physical value in real time in seconds and at no cost. And so our working capital can be as low as financial services to perform for our users for the next 10 minutes, right? We don't have any working capital costs. I don't have to have like a $10 billion inside of Lightning for me to perform services, right? Like I can programmatically refuel my infrastructure in real time every 10 minutes. And so not only are we gaining efficiencies in settlement and lack of intermediaries and its global nature, but our working capital costs are tiny. I've been able to build a big business and I didn't raise like an asinine amount of venture capital to park euros all over the planet. I didn't have to do that. I have Lightning infrastructure that refuels itself when it gets low because it's programmable, and we just make sure our working capital can be sufficient for what our users need to perform in the next half hour. It's a fascinating concept too in that way.
Okay, now this is what really made the business model click in my mind. The fact that you just don't need to carry a lot of money is why you will kick the ass of people like Visa and MasterCard, because now it all makes sense. I gotta say, now it's really clicked, because I mean, I usually, people like to shit on Western Union for charging fees as if they're just gratuitously just going around there and exploiting people. But really, there's a reason they charge those fees. If you want to send money to someone in a town halfway around the world, there needs to be a Western Union person there sitting there with a bunch of cash that they're not spending. and that's expensive. They need to have enough cash so that the amount of money that you want to send, they can give to them. So that requires foregoing a lot of consumption. It requires Western Union to be holding a ton of cash all over the world in order to do it. But with your business model, you need to hold a lot less cash than Western Union does.
That's how
That
we
makes
keep
a lot of
prices
sense.
so low. That's exactly it. And that's the same reason that Twitter on the Visa network can't perform the same service as what you're asking of Visa is to have money all over the world for all 500 million active Twitter users. And it's the concept of being interoperable with everything else. Because if I get tipped on Twitter and I'm in Nigeria and I want to go grocery shopping, Visa is then going to have to withdraw that external of their system. So they have to have Naira, they have to have this balance sheet, and it's infeasible. If it was feasible, then they'd also be a remittance company. Then they'd also be there. Then they also be just like Strike is. And Strike can be a remitting company, a consumer payment method, an acquiring payment processor, all of these things, because our working capital costs and general costs to achieve finality are non-existent. And that's why I can charge a retailer like a Costco 5 basis points, 0.05%. All 0.05% is cash profit because we didn't have to pay much. We have like working capital costs of the next 30 minutes and we've got engineers. And so can Visa match me at 5 basis point pricing? No shot. Can Western Union? No chance. And so not only is it, modern day tech that's competing on pricing, it's a total rethink. And in the same way that the internet dematerialized communication, where YouTube can be the way you consume news, also the way you consume live sports, also the way, right? Like a tweet and a Google search and streaming TV is all HTTPS, TCP/IP. A remitting payment, buying coffee, paying your kid allowance will all be Bitcoin Lightning Network Bolt 11, Bolt 12 invoices. They'll all consolidate and costs will be ultimately suppressed. The market will be open. Competition will be inherent and apparent, and consumers' quality of life will grow and enhance because businesses will be incentivized to compete for their experience as opposed to, use them for profit.
Okay, that's great. Now it's really clicked. I gotta say, now it's really, really clicked for me. Thank you. Max, you want to go next?
Yeah, sure. Thanks, Jack. This was a very inspirational talk. I just want to thank you, I guess, from all the plebs around the world. You're such a big idol, and I have to say, like, I bet there are 100 plebs out there just looking at what you're doing and being like grateful that you are on our fucking team. And yeah, I just wanted to say thank you. You've been a big inspiration for me as well. And living in Europe, I don't want to let you go without answering this question. We are ready for Strike. Are there any plans? Can you talk about it? What are maybe the problems you're facing? Yeah, just want to maybe know what the strategy is going forward, rolling out worldwide Strike. Yeah. Thank you.
Yeah. I can't take a compliment like that without spending a little bit of time just appreciating it. And then, I said to Saif, I was raised by this community. I really was. I didn't go to college. I spent my entire childhood and early adult life, and even currently in my mid-20s, reading Saifedean's writings, spending time. I am a pleb, man. I'll never think of myself otherwise. And so it means a lot to me. I could say that building a business that's gotten to the sizes it has been difficult and it's brought challenges to my life that aren't solved by engineering and managing people and understanding what you want in life. And it means a ton. The relationship I have with this community is something that I hold very, very close to me. So it means more than you know. Let me just say that. And then Europe, yeah, I mean, the problem with the existing monetary networks today is they're all regionally regulated, right? And so I've had a product ready for Europe for quite some time. And it's just about us positioning ourselves in a way in which we can launch it reliably and deliver the experience we want. And so if I had to give you a timeline, I would say within the next 1 to, I don't know, 4 months. I mean, it's really about the European laws and AMLD5 and a lot of Brexit. In the time I was developing a lot of this when Brexit was really at its peak and it was very unclear. And so, yeah, I can say as far as Strike's global fashion, I got clearance very recently to launch in a plethora of new countries, a ton. And so I think well before this year is over, potentially within this calendar month, Strike will offer more countries than the United States and El Salvador. And we really think that it's a competitive advantage that we have against other monetary networks and other monetary institutions like a Chase Bank or like a Visa network, that we can inherently deliver an experience to 8 billion people. And we invest in a lot of legal to allow for us to deliver that experience. And I hope by the time my kids are entrepreneurs that, paying lawyers won't be like requirement to deliver something innovative to humanity. But unfortunately, it's just the way it is.
Yeah. Okay. Thank you. Yeah. Back to the pleb thing. I think this is what makes you special, kind of, because you built such a big company, and it just feels that you're one of us. So yeah, thank you. I'm gonna tweet this out. 1 to 4 months.
Oh, Jesus. Yeah, just know along the same stroke that I absolutely am one of us. And so I would never, ever make any commercial or personal decision that would act against this community ever. So if you guys are ever displeased with anything I do, hopefully you understand that it's more complicated than just my decision making. So I'm working as hard as I can. So add that to the tweet if you don't mind.
Awesome.
Will do. Thank you.
All right, we've got another question from Peter, who's on an airplane and has crappy Wi-Fi, so I'm asking on his behalf today. What do you think of other layer 2 solutions like federated sidechain, or do you think Liquid, like Liquid, for instance, or do you think Lightning is the be-all, end-all?
Yeah, I think Liquid optimizes for something else. So I had mentioned earlier that Lightning optimizes for really resolving of the variable time and the variable cost of achieving finality in a Bitcoin payment, and taking the protocol and making it a broadcast consensus network and turning it into a link-to-link protocol and a link-to-link network. I think Liquid from day one was always optimizing. Liquid produces blocks as well, and they're 1 minute blocks, but these blocks have a certain set of throughput. Liquid can't compete on metrics and cohorts like TPS for Lightning. And so I think they're different technologies that optimize and try to solve for different things. I think that there's a thesis that Blockstream holds, where in Liquid, a Barclays and a Bank of America may opt to use Liquid to do their net settlement of $1 billion. And it's a little bit more centralized. There's a little bit more trust involved, but ultimately, I think the problem with Liquid is it doesn't experience the same type of open network effects that you'll see in Lightning. And so for that reason, I'm not nearly as bullish as I would be. I don't think you'll see a government, if the government of El Salvador, made everyone hop onto a federated sidechain, I think the response would be a bit different than an open monetary standard like Lightning. And so that doesn't mean Liquid's good or bad. I think they just optimize and solve for different things. I can say this though, too, which I think is an important point, and bleeds into why I think shitcoins don't make sense. I could spend, my entire life talking about why shitcoins don't make sense.
But you have better things to do. Don't spend your entire life on that.
Oh,
but yeah, go ahead.
Yeah. Oh, no. I think so. One of which is obviously scarcity derives value, and so by valuing other shitcoins, it implies inflation onto Bitcoin. If I can just wake up and be like, man, it's cold out, I'm going to create cold weather coin, then I'm inflating the savings of everyone else that is saving in Bitcoin and in this industry. So I think implied inflation is just nonsensical. But for when it comes to Lightning, I really do think that there aren't multiple internets. It's not like if I want to watch TV and watch a YouTube video, I go on a certain internet. If I want to tweet, I go on another internet. But we all experience one singular standard. That singular standard wins ultimately because it's open, because of the network effects, because of the economies of scale. And so I really do worry potentially about other second layer solutions, because they are going, eventually a really talented engineer that wants to work on Bitcoin has to choose one, right? They have to either build on the internet or AOL's intranet. And eventually, like, all resources, all efficiencies, everything consolidates on the singular, open, global, accessible standard. And so I really do believe that Lightning is that for us. And that doesn't mean that Liquid won't be a really viable commercial tool, but I think its development, its usage, and you're already seeing that right now. Twitter didn't integrate Liquid. El Salvador didn't integrate Liquid. That doesn't mean Liquid's not valuable, but maybe it's much more commercially optimized for our very particular target audience. Whereas I believe Lightning can be the internet standard. And so I view them totally different. And that's why, to me, shitcoins don't make sense, not only because they're implied inflation, but because, I can't have 250 different monetary settlement standards because that's what we have right now. That's Visa, MasterCard, Western Union, PayPal. Doesn't make any sense. We all have to optimize around a singular one. So by telling me that, why don't I achieve finality on Ethereum, that doesn't make, I don't understand the concept. Even if Ethereum was well engineered, it would be defeatist of the whole point of building one singular open standard.
Yeah, I don't think I would disagree with that. Dale has another question.
Yeah, the U.S. Senate just passed part of their mega bill included some phrasing that was added to Section 60501A that claims that digital assets have the same meaning as cash. So my question is, the U.S. government is going to try and suppress Bitcoin as best they can, and it may ending up like prohibition, where they outlawed alcohol, but there was alcohol available, but it gets bloody. So I have two questions. Where's the best resource blog that follows the law and what sovereigns are doing? And then secondly, what's your particular opinion about how that will resolve?
Oh man, best resource. I would maybe delegate that to the crowd. I can tell you this, I got a tremendous general counsel and legal team, but you don't want that resource, man. It's fucking expensive. And if I didn't need it, I probably wouldn't use it. But I don't know if anyone in the crowd has a particular resource for that. I feel free to share. And maybe drop in the comments. But and I guess my default answer to anything Bitcoin related when it comes to news is Twitter. Yeah, there you go. So, how I think it will resolve of itself, I think that as human beings, we're tool builders, and nation states compete, and innovation is required and inherent in our species, and it's a very dangerous concept for any country or government to suppress innovation, because you can't kill it. It's like energy. It's so inherently a part of our species that it has to reside elsewhere. So by trying to suppress energy, you're really just moving it. And if you phrase it that way to the U.S. government, do you really want to take efficiencies that humanity is making and arguably the most desired product of all time, which is money, outside of maybe things like water, and you want to suppress it, which is just move it? Yeah, I'll go develop and innovate in El Salvador if you really want. So I think the US government is faced with a tremendously difficult problem set, which is how do we allow ourselves to enjoy the things that we've built while also encouraging innovation. And I think as of the recent years, like Facebook, Twitter, Microsoft, all these big companies were developed and founded and built within the United States, Apple. And so I think history is on our side, and what's required of our species to continue to innovate. The US simply cannot try and suppress and kill it. How will they regulate it, and how will they try and find a happy medium? Is there even a happy medium? I have no idea. But those are my intuitive thoughts, I guess.
Okay, one more question. You don't have to answer this one, but do you have any kind of timeline for when you want to take Strike public?
No, it's a flattering question and a humbling question because it's a compliment in a weird way. But we got a lot of work to do. We do. It's been fun, and I'm really proud of the things we've achieved. But if Strike were to die today, I'd be a sad man. So there's a lot of work to do. It's before we can even entertain a concept like that. But if anything, Strike uniquely carries like one of the more passionate, well intent driven teams of all time. And I think Bitcoin births that within company ethos as well. So this team accomplishes things at such a shocking rate. And I don't think that that has anything to do with me. And it's more so the fact that, you know, as human beings, we want to be one, a part of something bigger than ourselves, and two, work something that will last longer than we will. And Bitcoin allows for humans to accomplish both of those in a really native, trivial, and awesome way. And so I think our team is great. I got belief in them. And I think that's why we've been successful to date, but a lot of work to do before I think about that milestone. Hopefully one day.
Absolutely, I'm sure. Yes. Well, this has been absolutely fascinating. I learned a lot, and I'm much more excited about Strike and what's coming up. So, thank you so much for joining, Jack, and best of luck on everything. And I'm sure we're going to have you over again when you introduce the next giant blockbuster new innovation in the Bitcoin world.
Yeah, thank you, and thanks to everyone here. I'm so appreciative of this community. It's made my entire life, and a lot of my happiness is derived from you all. So I appreciate it.
Awesome. Thank you so much. Take
Yep.
care.
Cheers.
Cheers.